Hello and welcome to this a detailed explanation of my momentum trading system. Now, I created this for private investors and traders based on my years of research analysis to keep it absolutely simple so people know when to buy and when to sell. Off the back of it, a lot of questions and demand from people over the years, and the technology has only just caught up to allow me to put into a trading system what's in my head, what I've written about in 16 odd books and so on. So I'm really excited to be sharing this with you, and well, let's just carry on and get right into it. These are the things I'm going to be talking about. I'm going to go through what it is we mean when we talk about in traders to what something called momentum. What exactly really does that mean to a professional? What are my principles of trading? What's my journey been? What are the key lessons in a strategy whenever we're developing a trading strategy? What are they? And what's my system or algo? Now, some algos have a bad name. What is it that would make my system and systems which work really good? What are the objections to any systems? How do we overcome those? And of course, the most important two questions: does it actually work? So I'm going to show you some actual examples, real live examples of it working, and can you use it? So with all of that, I've got to give you first of all some important notices. Of course, anything to do with trading means that you should, before you do it, take professional advice. Before you make any investments, you shouldn't actually follow any trades just blindly. So please do pause and have a read of this very important notice. It is important because with trading you can lose money as well as make it. Equally, on that front, we're going to be talking about foreign exchange trading. Foreign exchange trading carries more risk than let's say just buying one stock and holding it for the rest of your life, because there's an element of margin. That's where you borrow money in order to invest, and therefore again you should be familiar with all the risks associated with it. We want you, of course, to be making money, and to that end want to make sure that you fully understand all the risks associated with something like foreign exchange trading. Let me tell you a little bit about myself and my journey. Well, these are some of my books. There's been some 16 books that I've written over the last, well, 12 years or so, and these are just a selection of some of the paying clients to my services. Companies like American Express, Merrill Lynch, HSBC, Bloomberg, for whom I did a 3-year TV show, well, 2 TV shows on Tuesdays and Wednesdays, Goldman Sachs, who asked me to explain various financial products to their retail client groups, and so on. You'll be familiar with quite a lot of these names. For the Financial Times, I wrote a weekly column called The Diary of an Online Trader. For 5 years, that was over 200 columns published there. For Barclays, for their stockbroking magazine, I was the only outside analyst giving my views and perspective on the markets, and so on and so forth. So all of these companies entrusted me with my expertise to their client base, I'm proud to say, and that meant that of course I got a good insight into what it is that private investors are looking for, and had to keep on delivering good results for these companies and their clients. To that extent, let me give you a bit more background about myself as an investment manager. Well, I used to be a barrister. I'd started investing actually when I was 12 years old. I borrowed £100 from my aunt and bought some government bonds. That got me interested into investing, and thereafter there was no looking back. I went into the law and subsequently left that to trade full time. Various awards that I've won. In 2004 I won the Financial Times Predict the FTSE 100 competition. I had to predict the level of the FTSE 100 over a 1-year period, and I came within 0.5% of the correct figure. Just to give you an idea, I was up against traders, fund managers, academics, stockbrokers, as well as journalists. The worst performer was out by 50%, so it was no easy task. And previously on Bloomberg, I've been the best performing stock selector, and they would select weekly picks over a 6-month period, one long, one short, so it's 52 picks in total. That was back in 2002, and my picks were the best performing of the lot. There's been various other competitions I've won in terms of stock selection as well. My background, well, I became a fellow at Oxford University at the age of 29, a fellow in business and industry at Corpus Christi College, Oxford, where I lectured on behavioural finance, and I've read philosophy, politics and economics at Oxford and law at King's College, London. So lots of education there. Let's see if we can put it to some use. Well, 14 books. By the time you're listening to this, that'll be up to 16 books on investing, trading, derivatives, risk management. These have been published by the FT and Macmillan and Wiley. So I have several publishers, and they've been translated into all those languages you see there. As I mentioned, I hosted for 3 years a show on Bloomberg TV on investing. The reason I want to give you my credentials is very often people, when it comes to trading, don't have any, other than that they've read a lot of books. And quite frankly, I don't think that's good enough. I think if you're going to be risking your money and investing and trusting your trading to somebody, then they need to be pretty much a darn good expert on what it is that they are advising you on. I've also, as mentioned, written for the FT and for learned journals. So the most critical journals, critically acclaimed journals in my industry, things like the Journal of Derivatives Trading, and that was a article on operational risk management. And those credentials count far more, I think, than just writing the odd piece about money management and risk management, because these are academic journals and you are peer reviewed by the best in your business. I appear, as many people will have seen and know, on the BBC, CNBC, CNN, on Reuters as well, to discuss macroeconomics, investments, and my global stock selections. So, what about some of these stock selections? Well, I'm the only outside analyst to be published by Merrill Lynch, HSBC, and Barclays Stockbrokers, and Lloyd's TSB to their high net worth clients as well. One of the great advantages of being a recommended and a commended analyst and stock selector with a proven track record is you get flown out around the world, and those are just some of the cities I've been to give talks and paid talks on investing to local audiences, everything from 2,000 people in Guatemala to a couple of hundred people out in Dublin and Budapest. This is a clipping from the Financial Times, a publication where I mentioned I'd got within 0.5% of the final value of the FTSE 100 over a 12-month period. And as you can see, the people who came near the bottom of the list were out by a significant amount. Jasper the cat, incidentally, thank God I beat Jasper the cat, because that was the editor's cat. And some of these names you'll recognize and will have heard of, and you can see that I was out by 23 points out of a total of 4,476. So not bad going. I can say I'm proud of that, and that's some of the expertise I'm trying to get across. This was then what the FT wrote. Patel is top FTSE 100 forecaster. Not bad going. And so what I want to make sure is that we continue with these kind of capabilities that I can now, thanks to innovations in computing power, pass on to other people such as yourselves. Some of the nice things that have been said about me by a variety of people commenting on the investment books that I've written. You can see here the Chief Operating Officer of Merrill Lynch HSBC, the best guide of its kind to personal investing, will satisfy both the beginner and professional. And you can see Chief Executive of American Express share people also writing very nice words. The reason I wanted to show some of this is because this is the kind of expertise I want to bring across to you, the private investor. I don't think there is anybody in the industry who comes close to being able to get across the most innovative products to private investors in simple, clear terms. That's got to be my job. Now, the problem is that investing is complicated, and my task is to simplify it without making it simple, if you see what I mean. I've got to simplify it so you can understand it, but just like the iPad I could make simple so you can use it, it doesn't mean that the product under it is simple. It's a complicated product, but I've got to simplify it, and that's my job. I've got to take all the complexity that is in the market and make it simple and accessible to you, the user, and that's what I do with my trading system. So some more fantastic comments, and as you can imagine, I'm very pleased with these, because it means that when my peers and those who are the best in their business say good things about you, it ensures that you keep to that level of quality, you keep to that level of accessibility for people. So why do we want an algorithm? What is an algorithm? What is this thing that we're talking about today? And one of the reasons why people want to trade, for instance, the reason they want to not just buy a stock and hold it forever or give their money to a fund manager, is because what they've seen time and again with the markets is that the markets can just keep on falling. You could be holding something for years and years and years and it goes nowhere. And so instead what they try to do is time when to buy, when to sell, instead of just holding on and seeing prices and value of their stocks drop and drop and drop and drop. And you can see here I've shown some prolonged periods in the US markets where grandma, poor little grandma on a rocking chair, is just waiting and waiting and waiting for the markets to rise. You can see from 1901 to 1903 and so on, some rather lengthy periods. And we had the great crash in 29 to 32, 73 to 74. These are 2-year duration periods where the markets just keep dropping. Well, that's 2 years where you're just hanging around, and I've only taken it up to some of the more drastic periods. There are many periods, and certainly the current period, where you look at some companies, the likes of Barclays, who are pretty much where they were 12 years ago in their share price. You bought it 12 years ago, excluding dividends, you haven't actually had a return, and dividends have only just compensated you for the inflation. So how do we avoid that problem so we can actively get in and out and make the kind of returns we see traders making? That's what I want to give people. And an algorithm or a system, a trading system, just gives you buy and sell signals. That's all, and that's what I'm going to be giving you. And what we're trying to do, of course, is this. We're trying to get in where you see the point O. We're trying to exit where you see the point P. Try and enter where we see O, try and exit where we see the point P. That's all. We're just trying to time the market. That's what I mean by timing. Enter, exit, that's all. Buy low, sell high. Buy low, sell high. Simple. This is bread and butter to everybody. Everybody knows what this is. I just took a random chart and I stuck some O's and P's on it to show you what we're trying to do. With my system, I'll show you exactly how it's performed, what its results are, and how well it's done. So let me move on then to what is it? What is momentum? Let's get into some of the details, some of the nitty-gritty, so you can actually understand how I came to develop this system, so it'll help you understand exactly what it is that makes it tick, makes it work, why I think it's valuable, and most importantly, why it works. Because if you think it's just a black box, you just think it's just random numbers being generated, then it's no good for either of us, because you need to understand what makes the markets tick. So let's start off with box number 1. And imagine this is a share price. So I've put P on the y-axis for share price, T for time on the x-axis. And imagine this is a share price going, first of all, it goes down, and then it starts rising up. A typical cycle. This happens so very often. Now, it could be that this is over the space of a day or even the space of a minute. It doesn't really matter, but it's how the price has moved in this particular security, in this particular issue. And what we're trying to do is, as I mentioned before, state the obvious, is to buy low, sell high. The problem very often we face is that whatever method we use, we often end up getting in too late. So we buy here. Well, that's too late because the market goes up a little bit and then starts dropping. You know that feeling where you buy and you think, oh God, the market's out to get me, because as soon as I've bought, all it's done is just dropped again. And that's no good. So we need indicators which ensure we don't get in too late. Now I want you to have a look at point number 2 here. Market's fallen. It's risen a bit. Now, on the whole, I don't like buy signals when the market's still falling. So here I marked it as point X, where the market was still falling. I don't like anything which generates a signal while the market's still falling, because how do I know it's not going to keep on falling? So one of the things that I want to avoid is getting in too late, or, as you can see with point X, getting in too early. I think there's a sweet spot between X and getting in too late, and that tends to be where the market's risen a little bit. But wait a minute, if the market's risen just a little bit, that still leaves me with a problem, which is, how do I know, even though it's risen a little bit, that it'll continue rising as it does in box number 3, where it goes from Y, continues rising to Z, fantastic, or it'll actually go from Y and then back down again, pretty much immediately. Well, that's what a good system differentiates. But the most important thing is, a good system will ensure, first of all, there's a load of trades I won't even be making. I won't even get a signal on. Those are the ones which are in box 1, which are too late, and those are the ones which are X, where the market's still falling. So all of a sudden, I'm already saved from half of my bad trades where the market's been falling, or I'm getting in too late. That's half my bad trades removed immediately. So then what I'm left with is the other half. Of the other half, I'm going to get a whole load which are going to continue going up, and a whole load which may well go up a bit and down. So whereas before I only had a 1 in 4 chance of getting the kinds of trades which are in box 3, I only had a 25% chance. Now I've actually got, it's going to be better than a 50% chance, because you'll see that I actually put the odds in my favor even more. So instead of being right 1 in 4 times, and in actual fact, most people are right a little bit better than that, because the markets, when they do it this way, tend to be pretty random for them. I'm actually going to be right a lot more often, because I've removed the bad trades, and I'm even going to reduce the chances of making a loss, even with what I'm left with. So that, in broad terms, now don't worry if you don't understand all of the complexity of loss, because that's the whole point behind the system. I want to show you it's not just a black box. There's rationale and logic and expertise, and most important, logic. I don't want you to take on faith what I tell you. I want it to make sense to you based on everything, not just that I know, but also what experts in the industry know, what the FT and Barclays and Goldman's have all paid me to educate their people about. No. So, as I explained, let's go through each one of these boxes. First box, price goes up, we've got in too late. We don't want any signals which get us in too late. A good system will remove those. A bad system won't. My system removes the too late ones on the whole. Point 2, we don't want to get in at point X here, because the market's still falling. I don't know if it's going to rise. It could continue going down. Point 3 is where it's gone up to point Y, and then I want, these are the sweet spot trades. These are the ones I really want. I want it to continue going up to Z. And I want, and I know I'm going to get some of these, but I want to make sure that if it does go up a little bit after I've got in and then starts dropping, I can get out pretty quickly and not lose too much. So we've got to have within our system the ability to mitigate those losses as well. And those are the kinds of signals. So just to give you a recap, there they are, those images again. So what does a good system do as a recap? It keeps you out of bad trades, those where the market's still falling or you're getting in too late. It lets you get in early, but not too early. It doesn't get you in while the market's still falling. It uses the truth in existing indicators. Yeah, there's a lot of indicators out there, and they're trying to achieve an underlying aspect of getting you into good trades. But very often, because they've been around so long, they've been used so much that they no longer work adequately, but there is an underlying theory behind them. And what we want to do is be able to innovate on that, and that's what I do. I've innovated beyond what's out there, but we want to still not be so innovative that it just doesn't work because it's so novel, and it's getting that balance. I see myself as an inventor, as an innovator, somebody who's actually practicing what they preach and using those indicators. We want to use the price and what the price does as the ultimate entry and exit signal. I don't want to use esoteric things like what day of the month it is, or whether the moon is full moon, or just use mathematical indicators alone, because that's just math. How do I know there's a connection to the price? Because it's the price that'll make you money or not, whether you make a return or not, and that's got to be fundamental. What's the price actually doing? And that's what my indicator does. So let me go into a bit more detail, as I promised at the start, of what exactly it is I mean when I talk about momentum, when I talk about share prices, and what's the underlying philosophy behind my indicators and why they work so well. And I want to explain this to you so, as I said, you get an understanding this isn't just some IT engineer throwing some numbers across at you, but is in actual fact somebody who has genuine expertise at what it is that makes a good, profitable trading system. So here we go then. Here we go. I want you to think of a price like anything that has momentum, like a ball, for instance. Imagine you throw a ball down. It goes down, bounces up, goes down, gets slower, and bounces less and less. What a lot of people don't understand is that actually with a ball you can, and a physicist will tell you, you can work out when it bounces up exactly the point at which it's about to peak and then turn direction. You can tell that because it starts decelerating, it slows down, it stops momentarily, and then starts dropping and accelerating with the force of gravity, bounces back up, and then slows back down again, and so on. Well, the funny thing with prices, you'll have noticed, is that they too move in such a cycle. So a group of traders in the 60s and 70s that made this observation, they said, wait a minute, prices do this. They accelerate downwards, then they suddenly stop and they turn. They accelerate upwards, then they stop and they turn. What if with prices we could also tell before they turn that they're slowing it down and they're going to turn? What if we could anticipate that? What if, like with a ball, we can tell where it's going to stop and turn by looking at how it's slowing down while it's still advancing? What if we could do that with prices? Well, what's the equivalent with prices? What could be the equivalent with prices where a stock is still going up every day, but you've got a clue that it's going to stop going up soon, slow, and start turning around? And so they try to work out through mathematics how you do this. And what one group worked out is that actually when a stock is rising in price each day, you know it's slowing down when it doesn't close near the highest it's been for that day. So let's say it went up 10 points in a given day. If it closed up 10 and the highest it went up was up 10, then you know there's a lot of momentum behind it. There's a lot of buying interest. But let's say it went up 10, but actually at the end of the day the price closed up just 2. Then that means when it was up 10, a lot of people came in and sold and they took the profit and drove it back down. So it was up 2 points. But at one point it was up 10 points that day. That suggests it's slowing down. The momentum to buy and to push the price forward is slowing down, even though the stock was up 2 points that day. That's what we mean. Now, don't worry, this sounds complicated. The great thing about mathematics and these indicators and technology is that we have put all of this maths into a formula and allows people then to get good buy and sell indicators. This gets done for them. Now, most of you will be familiar with how we draw prices on a stock price chart or with foreign exchange. You draw a line for that period. It might be a 1 minute or 1 day. It doesn't matter what period you're trading and you pick. The low is the bottom part of the bar. The high is the top part. The close, so it could be the end of the day or the end of the minute or the end of 4 minutes, whatever the chosen period is this bar going out to the right, and the open where it started is that bar to the left. When it closes near this period, that suggests there's lots and lots of momentum. Now, you're not going to go looking at hundreds and hundreds of bar charts every day to work out, ooh, is there momentum, isn't there, compared to the day before. When it loses momentum, what tends to happen is it closes near the low for the day. And so through mathematics, we can get the computers to do all the hard work for us and work this out for us. What we discovered is that actually money does move in these waves. And not only that, it moves in these waves not just through 1 minute periods, because that's where the traders, the very hyperactive traders, are trading, but of course you've got long period traders. You've got people who are just maybe looking at 1 day charts, 2 day charts. Some might be looking at just weekly, or you might have the very long-term pension fund managers looking at just monthly charts. Well, they're all buying and selling the same securities at different period. So it could be, for instance, they're buying dollars. Some are doing it over a 1 minute period, saying, oh yes, I'm really excited over this 1 minute period. Others are doing it over a longer term period. If they all move in the same direction, a little bit like waves on the sea, then you're going to get more of a big move up than if some of the long-term traders are selling and the short-term ones are buying. You're going to get a lot more froth and friction, noise, and what's called being whipsawed, a bit like when you fling a saw and it goes boing, 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 up and down, and that gets you wrong-footed and frustrated. Because you've got one set of buyers colliding with a set of sellers. So we want any system to be able to better tell us when everybody seems to be moving in the same direction. So the buying is in the short term and long term in the same direction, ideally, because those are the biggest and best moves, and we want to try and ignore some of the other false moves. Now that's an overview. I could talk about this for hours on end, but that's just the overview part of that, and my system includes that. It ensures that when I look at momentum and I use indicators such as what's called the MACD, the moving average convergence divergence, don't worry, you don't need to know the mathematics behind this, but I'm telling you in case you want to research any of it and get into more detail about it, so you don't at any point think I've got some kind of black magic voodoo box telling me when to buy and sell. No, this is all based on mathematics and logic and things which people have been using for years, but I've innovated upon it. I want to make sure that if only the short-term buyers are buying, that's here, and then the long-term buyers just sell, that I don't get these false rise early signals. I want to avoid these, because all that's happened is it's gone up a little bit and then it's come back down again. And I got overly excited, I got in, and then it fell back down. That's no good. Equally, I want to make sure I don't get in too late. I want to get in so that I get the meat of a move. And that's important for me, because if I get in too late, then I've missed, say, half a move, and I've only made half as much as I might otherwise make. And it's getting that balance. That's what makes trading tricky. How many of us have been so frustrated that we think, oh, as soon as I got in, it moved against me, the market's out to get me, or, oh, I got it right, but I waited too long and it just kept on going up, but I could have made so much more. How do we make that process more efficient? And the way to do it is either I could teach you for years on end, as I've been taught and had to learn, or we do now, thanks to the innovations in computing power, we get it done for you. And what I look for is changes not on the textbook way in which these indicators, mathematical indicators, are taught and learned. I look at the way I think they actually work the best through my experience and through my livelihood. And I look at different time frames, so I can see the longer term and the shorter term indicators. So I look at the weekly charts and the daily, and I look to see if the price is making a new 1 or 2 period high. In other words, it's the highest it's been for the last 2 periods. So if it's the daily chart I'm looking at, the price is the highest it's been for the last 2 periods, and the indicators suggest that the price is about to turn as well. So not only is it the highest it's been for the past 2 periods, but it's a sustainable rise. It's not one of those false rises where it's the highest it's been for the last 2 periods, but then is about to fall off again. And there are clever ways of knowing where that's going to happen by looking at not just the daily, but also the weekly, or if it's 1 minute, looking at the 1 minute and the 4 minute. Depending on your time frames, you look at the time frame you're trading in and the one further out time frame, and look at the indicators. And I look for a flattening of the indicators. So I look at them quite early to see if they suggest there's a turnaround situation there. So what I'm doing is very innovative. It's very different to what people traditionally do when they look at these indicators. One of the things you've got to know when you look at any system, and don't worry if all of this seems a bit too complicated, because of course, as I said, you get buy and sell signals. I want to just make sure that you know what it is that I'm doing, so you understand that there is complexity behind this. It's not just some numbers being thrown out. But the principles of any system is it's about how much you make when you win. So when you're right, it's about how much money you make, and how much you lose when you're wrong. You've got to make sure you make more. It sounds obvious. You make more when you win than you lose when you're wrong. Well, actually, a lot of people don't understand that. They think it's all about, well, I've got to win more often than I lose. Well, it is partly that, but a professional will tell you it's more to do with making more when you win than when you lose. Because a lot of people, they'll win 6 times out of 10, but the 4 times they lose a lot more. And so they end up overall at a loss. So my systems ensure they incorporate the best of money management. For example, let's say you're right 5 times out of 10. You're right 5 times out of 10. Say you make $500 each time you're right, and say you lose $400 if you're wrong. Well, you're profitable, even though you're only right 5 times out of 10. You're right as often as a coin. And let's say because of my systems and momentum and all these things I've spoken about, you are even more so, you're right 6 times out of 10. Now, that's great, but we've got to then make sure that if you have a string of losses, because they could still happen because you're right 6 times out of 10, but you could still have a string of losses just in the same way you could get in a coin toss a string of tails. You've got to make sure you're not going to get wiped out. And the way to do that is to make sure that after a string of losses, you don't lose all your trading capital or a significant amount of it. That's because if you have a string of losses, let's say you lose 5 times in a row, and you're down 20% as a result, you need 25% with what you're left with to break even. Let me explain that. Let's say you had £100 or $100 and you're down to $80. Well, from $80 to get back to $100, you need a 25% rise. You were down 20%, but you need a 25% rise on the $80 to get back to 100. That's a lot. Even though your loss was only 20%, you need more of a gain to get back. That's why it's important to make sure that if you do have a string of losses, and 5 is a pretty bad streak, but it's possible, you don't end up down too much. And one way we do that is to make sure we only bet small sizes. Now, you very often don't hear people saying that. You hear people say, bet the ranch on it. This is so good. It's so great. It's such a no-brainer. Bet loads of money. No professional would ever say that. A professional would be responsible and always tell you, we bet relatively small sizes, so if we get a string of losses. Now, this is just simple maths. It's logic. You don't need me even to tell you this. But that's how you know somebody's being genuine when they're talking to you about trading systems, when they tell you to bet small sizes. Most people won't bother telling you that. Now you might be wondering, okay, how long did your system take to develop then, Alpesh? Well, actually, in a way, you could argue it's taken me 30 years. I started trading when I was 12. I'm now 41. Yeah, it's taken me a long time to develop all of this. Well, that doesn't mean I've kept on improving it. It means I've been using it. Once it was done, I get on with it. So I'd probably say for the last 12 years, I've not changed it. So for 12 years, I've been using it. And it's taken me maybe 10 years before that to develop it. And is it as good as the human brain? This is the other thing people ask. Well, it's better than some human brains. If your human brain is like Homer Simpson's, then it's better than that. What you got to remember about the human brain, unlike a computer or unlike a computer algorithm, is that the human brain can take in experience and judgment and expertise and nuances and things that are happening in the market, whereas a computer system can't incorporate all of that unless it was the world's most sophisticated computer system. So I'd say it is better than the human brain in that it saves us a lot of time, a lot of effort, is dispassionate, allows us buy and sell signals. We still want to use some degree of judgment. You might get a signal which says buy, and if there's things you know that's happening in the markets, or you want to stay clear because you think, you know what, I got this signal, that's fine, I'm going to override it. I'm going to manual override it. That's fine. That's perfectly okay, and there's nothing wrong with that at all. You shouldn't feel obliged to just blindly copy regardless of judgment and expertise. The great thing about buy and sell algorithms and systems from a professional is that an amateur will always tell you, oh, you just follow it blindly all the time. You've got to do everything. A professional will tell you that you should use it as an educational tool at the same time. It will give you buy and sell entry and exit signals. You should use that to determine whether or not to buy and sell. How accurate is it? Well, why is it not 100% accurate then? Some people claim to be 100% accurate. They're lying. Only God is right all the time. His relatives are right about 8 to 9 times out of 10. We're happy if we're right 6 to 7 times out of 10. Obviously, logically. You can't be right 100% of the time with anything to do with the markets. Anybody who tells you they are, they're lying. Anybody who tells you they're right 8 times out of 10, they're lying. Logic tells you they have to be lying. We want to be right just a bit more than a coin is, because that will substantially put the advantage to our favor. Is it a black box? In other words, is it something which just generates answers, buy and sell signals without any explanation? Well, obviously not. Not only because I've explained some of the detail behind it, but also because statistically it also has done back testing. It goes looking backwards and says, right, this is when it works, this is what doesn't work, and let's focus on what does. And it's based on reason. You see, the problem with the black box is it could just be coincidence. You get a load of buy and sell signals and you've made a bit of money. It could just be coincidence. But I've given sound reasons as to why. Momentum, prices, where they close, and so on. And I've given you transparent explanations. So a black box is something you can't look inside. Here, I've given you something which we can look inside. I will explain more the buy and sell signals as we go forward. I know also what you're thinking. Aren't algos and systems just false promises? Doesn't everybody just talk about these? There's a load on the market. Yeah, they are false promises when the designer's an IT guy. What does he know about trading? Never trust IT guys. Yes, when the person has no credentials. There's so many people out there who they pick a program and they say to him, oh, can you just create me something? And it randomly happens to work, just like a coin toss will work if you keep on throwing enough coins. But they've got no credentials, they've got no background, they haven't spent their life doing this. And those people I don't like, and that's one of the reasons why I got into this market, because there's too many scammers. Think of myself like Richard Branson. Yes, that's what I'll do. I'll think of myself as Richard Branson, gets annoyed with some of the people out there and says, no, I'm going to create something which is better. Or Steve Jobs, I want to create something which is better because I think what's out there can be improved upon. And also, it's bad when there's no reasoning or logic behind it. A lot of people out there, they just have no reasoning or logic. They say, oh yes, look at the system. It generates these results, or it has done. Well, wait a minute, what's the reasoning and logic behind it? It's coincidence. It's, as I say, like the coin toss. If I put 10 people in a room, some of them are going to make money tossing coins. But that doesn't mean it's got reason or logic behind it. So, how do people use such algos? Like I said, some follow it blindly. That's not a clever idea. You can almost use it as an additional source of decision-making information. That's how you should think of it. You could use it as an educational tool. So it teaches you, right, I see how the markets are moving. Now I know what to focus on. Instead of focusing on everything all the time, oh, there's a buy signal here. Let's see what happens. I see why that's worked. And it teaches you to do your own thing, but it's invaluable as an educational tool, as a decision-making tool. And if you want to just follow it blindly, you could. I don't recommend it, but you could. Also, I want to know the exact source code. That's what you're thinking. You're thinking, well, I want to know exactly what the mathematical formula is. I don't just want you to tell me in general out terms. Absolutely, I see myself as a business person. I'll tell you my source code just as soon as Coca-Cola and Kentucky Fried Chicken tell you their recipes and Microsoft reveals its source code. The day that happens, I'll tell you the source code for my algorithm as well, because I want to be treated just as fairly as they are by you. And so I hope that's fair enough. Now, how does the Alpesh Patel momentum indicator work? Well, in one sense, it's simple. It gives you a buy signal and a sell signal. That's all the market is, a buy signal and a sell signal. Tells you where to buy, tells you where to sell. How does it do this? Does it really work? Well, one of the things you've got to know is all currencies have certain characteristics. So I look at the currency and the time period. If somebody ever tells you there's a one-size-fits-all indicator, it's just rubbish. How can one indicator fit for the yen as for the dollar? There's a whole group of different traders trading yen to, say, dollars, or to pesos, or to Canadian dollars, or to sterling, or to euros, or whatever else it might be. So what I've done with mine is made sure, well, what does it work for? I've gone and looked at what currencies it works for, and I wanted to make sure it worked on the most liquid, the most traded currencies, because those are where the biggest money is likely to be made. And this is it. I want to use it only on these two. Sterling dollar daily chart, so you look at the daily, so each bar is 1 day, and the euro dollar 1 hour chart and the 4 hour chart, because these have certain characteristics which are suited to the indicators that I use, to the momentum that I use, to what the market uses. Those, for instance, trading dollar yen or euro yen might be using a whole different set of things. They have a different mindset. They're a different group of people, and so on. They're not the ones I'm looking to make money with. This is what I focus on, and I explain all of this when you download the algorithm. There's a whole lot of educational information on how to load it up, how to interpret a buy signal and a sell signal, and so on. So there's ample educational information on all of this. How has it performed? Well, these are our results from 2009 to 2012. I'm recording this in 2012, so this is bang up to date, and the period that we've taken costs and spreads, so you can see every single trade, because I can't do every single trade. I don't automate my trading so that every single trade is done. So I thought, well, actually, let me not just give them what I've done, because people might say, well, that's only what you did. Why don't I give you every single trade possible that could have been done? And this is how it fared in terms of profitability. And as you can see, over those periods, it's been profitable from going from 2009, so basically December 2008, going on every single period, right bang up to date to June 2012, and you can see the levels of profitability of buy and sells. That's the aggregate profit. It doesn't mean every single trade was profitable. It means overall winning trades plus losing trades, these are the profits you were left with. Obviously, if you traded larger sums, you'd make more than each of these figures. So instead of making 2,000, if you traded double the size, you made 4,000, and so on and so forth. I'll go into that in more detail and look at some exact trades, specific trades, in a second, because I want to really give you the X-ray, reveal in the greatest possible detail all of this material. Now people say, wait a minute, is it going to be complicated? Well, no, I take you through that very carefully, what the buy signal is, what momentum is, what I mean by 2-period high price, and so on. And actually it simplifies it, because the algo does it for you, the system does it for you. It tells you the buy signal and the sell signals. You don't need to know when the momentum is not negative and all of these things, but I will explain it. You don't need to know and understand that, but I explain it nevertheless, because the algorithm goes, you can buy now, and so on. So this allows me to simplify things thanks to technology, whereas before I had to teach people this and they had to do it themselves and so on. Now the computer system does it for them, but I still want them to understand it. And this is what it'll look like. This is what it looks like on your system. You will see an arrow saying get ready, there's a buy signal, and you see a red line which says, right, if the price then goes above this red line, that's when you buy. Pretty simple. You get an arrow to give you the warning, and then you get a red line to say, right, as soon as it goes above that, that's when you buy. Now there's reasoning behind that, which I've mentioned before. I look at the momentum in that period and the period after. So if it's a one-day period, I look at the momentum on the one-day period and the weekly period. But you don't need to understand all of this, although I do go into explanations once you download the algo, exactly how and why that works and what the rationale behind it is. But I want to give you an overview for now. But this is how simple it is. It gives you a buy, and that's where it tells you, right, now as soon as it goes above that, buy. Pretty simple. Couldn't get simpler than that. It also, as I say, gives detailed explanations on the momentum. So that was when we looked at the previous chart. We're seeing the momentum just starting to rise. That's why we get a particular signal, but it's not just in this period, but it's in the period after as well. Most people telling you about algos won't actually tell you what the underlying rationale behind it is, or they'll obfuscate it. What I'm trying to get you to understand is, yes, you could do all of this yourself, but it'd be very time consuming. I'm saving you time, and first and foremost, let alone hopefully saving you a lot of money, and thirdly, but possibly most importantly, making you money as well. And then you get the buy signal. It goes to a 2-period high. You only buy on a 2-period high. So that's the highest it's been for the preceding 2 periods. That's when we buy. Pretty simple stuff. As I explained, you don't need to worry because it's not complicated. The algo shows you. The system shows you. It also tells you when to exit. So if you've bought something, when do we exit? We wait for the momentum to be lost. We wait for the price to move down. We exit at a 50%, i.e. half our position at a 2-period low, and the price is the lowest it's been for 2 periods. And you'll see a pink line. I'll go into more detail on this once you download the algo, but I just want to give you an overview so you understand how easy it is. And the next bit, when you get the red cross, the next of the position. Why half only and half? Because sometimes the price dips and then starts rising again. This way we stay in and we've only exited half our position and we've kept half of it. I found that's the optimal way to do it, the profitable way to do it. Let me give you some exact trades. Let me give you some actual examples. And here I've put in the numbers. You could pause this video at this stage and look at it in far more detail, but you can see a buy signal. There was the buy signal, there was the price, the entry price was approximately there, 1.59425, and then there were some exits based on what I mentioned. You get a loss of momentum, you get the price making a 2-period low, so you exit half of it, and then you get a loss of momentum and the price making a 3-period low, so you exit the other half. What were the prices that you exited at? Well, you exited half at that price, the other half at that price, so in total you exited at that on average. The profit is, therefore, on $3,000 that you might have used to trade with. I've assumed $3,000 as a good sum on which people might trade with. What do I mean by leverage of 100 to 1? Well, most people use foreign exchange and they use the leverage. That means you were essentially using $300,000. I know it sounds a lot, but don't worry, it's not, because as you notice, foreign exchange moves to several decimal places. By the way, when you download the algorithm, I also give you a whole set of education on foreign exchange trading, what it is, how it's done, and so on, and which brokerage accounts to use, and so on and so forth. So don't worry about all of that. Explain all of this in a lot more detail in that, and how people in foreign exchange actually trade. So you see there, with your $3,000, in this example, which I picked, it was a 5,250 profit. But let's actually just assume, we were a bit slow, we missed the buy signal, we didn't quite get out when the machine told us, and let's reduce that to just $3,000 of profit. I mean, that's quite a, you see, a lot of people with algorithms will say, oh no, it made exactly this. And what they forget is actually, in reality, by the time you pick up the phone or you press the buy on the screen, on the online trading screen, you might have missed a bit. I'm being very generous and saying, let's just cut a whole load of that profit out, and let's say it was only $3,000, to allow for any commissions, if there were any spreads between the buy and sell price. And I explain all of these terms when you download the algo. Well, it's still 100% return over the space of just a few hours. 100% return, it's not bad, even allowing for the fact that we missed a lot of the profit, which the algorithm says we wouldn't have done, but let's say we did. That's how it works. Gives you a buy signal, you buy, tells you when to exit, you exit. Simple. And those are the returns. And that's one example, one live example. I'll give you more examples, of course. To make it simpler to show, let's assume basically for every 175 points, as in the last example, we make 100% return on money. The reason I say that, and it's not a big assumption to make, is we made 175 points there. You see? 175 points between the buy and the sell. It actually made more than 100% profit, but I'm going to reduce the profit by almost, I'm not actually halving it, I'm virtually saying. So every time we did actually on 175 points, we actually made double what I'm saying, but I'm going to remove that, because we want to leave room for maneuver, we want to be conservative, we want to be prudent in our maths, we don't want to count our chickens before they hatch and all the rest of it. So let's say if it goes up 175 points on $3,000, we make 100% return. Let's just look at some more examples that we've done here. And again, you can pause this at any point, but there's an entry, there's an exit, there's an exit, that was the spread, that was the profit, it was 285 points. Well, that's over 100 points. In total, it came to $8,562 on $3,000 that we used. As I say, you can pause and look at this at any point, but you can see some examples that we've done. Here's another example. The profit here was 5,300. You might say, well, wait a minute, you just picked all the best ones. Actually, I haven't, and you'll see that in a second. Because I already confessed, no system ever works 100% of the time. If it works 6 or 7 times out of 10, I'm happy. But when you get these kind of profits, you are pretty happy, of course, because don't forget, the exit ensures you don't make mirror losses. Your losses should be a lot less when it's wrong than these gains. And that's what an honest systems person will tell you. There will be losses, they should be a lot less than the gains. Here's another example, $10,000 on this one. As I said, I didn't actually even pick these. I got one of my assistants to pick these. I said, just find some random periods where you got buy and sell signals so that I can't even be accused of self-interest, of just showing the winning ones and so on. I actually got somebody else to do it for me. Pick the buying and sell ones and do the calculations. Here's another one. Profit, almost $10,000 on the same thing. Got the sell, So here we sold first and we bought cheaper later. I explain all this when you buy and download the algo, how to go short as well as long, what's called short as well as long. And simple, get a signal, buy and sell, and those are the profits associated with it. Now, as I say, I've been using this system on foreign exchange for about the last 12 years and have not changed it over 12 years because I've not found the need. And before that, I developed it. It's only now the technology allows me to put it on screen like this. We've got another one. Now look, see, not all of them produce crazy large amounts of profit. This one only produced 1,467. Let's say we even just broke even. Fine, some trades you break even, you don't even make anything. It's okay, because on the others, like these, you do make. So more examples. And I wanted to give you lots and lots and lots and lots of examples so people don't say, oh, well, he didn't give me examples. He didn't show me it actually working in practice and how it works and didn't explain the reasons behind it. I would say, and it's my ambition, as I say, to be like the best business people in the industry, and the best business people, not just in my industry but in any industry, will always be transparent about the product, will show you the good sides of it as well as the bad sides of it, and they will disclose all of that. And that's what I want to do. I want to be known somebody who's very open, transparent, and explains and educates as well as entertains people and informs people. And again, more examples you can see here. So why release this then? Why do it? Well, my business heroes are Apple, Coca-Cola, Microsoft. When they created what they created, they didn't just keep it to themselves. They could have done, but they didn't. I do think of myself as a business person. I think I'm an innovative, and that's important, expert, educator, and practitioner. I don't just want to be an educator or a practitioner or an expert. I want to be innovative. Innovation means getting out there. I think this is a true breakthrough because I think there's a lot of rubbish out there. And like an Apple, I want to go up against the big boys and say, you know what, I think there's something, or like a Virgin, say, you know what, I think what's out there is not good enough. I want to clean up the rubbish out there. As an Apple and Virgin said the same, so why shouldn't I? I think it's brilliant. Like I said, I want to be like Apple. Doesn't take profits away from me by me releasing this. It doesn't mean, oh, Alpesh, that means if it works so well, you're going to make less money. Not true. Not true. I still own the source code, like Microsoft and Coca-Cola. I still own the source code to the product. It's a business. How do you price something like this? Anything according to business principles should be priced according to the value to a customer. As with all good companies, you have to be the winner. If you're not the winner, there is no business, there's no product. Savings is one way to look at it. If you currently make 50 trades per year and save, say, $100 per trade, then that is $5,000 saving annually. The returns is the other way to look at it. If you currently have $10,000 portfolio and increase your returns by 10%, then that's a $1,000 return in any 1 year. So things could be priced according to those kinds of figures. Savings plus returns, that's $6,000. Would you price something at $6,000? Well, it's one way to go. In actual fact, it's done at a fraction of that. And then people say to me, well, okay, how do I get the license? There you go. It's on there. Click on there now. That's how you get the license. Why have I limited it to numbers? Why have I limited it by time frame? Well, that's very, very, very simple. And you've got to go there tonight to actually get it done. The reason I've limited it to numbers and time-wise is I don't have the time to be doing all of this forever and ever and ever. I've got other things to do, as have you. And it's the best way to ensure people are serious about a product is that they just get on with it. Because if they're not serious, I end up wasting a heck of a lot of time talking to people who just actually don't want to get on with pulling the trigger. So there you can see where to go, what to do, and you get the step-by-step instructions on installing and accessing, as well as starting to trade. All the details about how to use foreign exchange and this particular indicator as well. As I already mentioned, it's time limited, and the reason is I do not want to be constantly giving broadcasts and messages and all the rest of it. Nobody's got the time for that. And also, the cost of your problem only increases with time. If you're not interested, wasting my time, which is, I've got to tell you, more expensive than anything else. So that's where you go to get on with it and get on with the opportunity. I want to reward those who take action. And on that note, there, I've left the URL for you. Please do get on with getting that. So, finally, leave you with this thought and this screen. immediate action, lifetime, one off. There it is. So I've got some emails and questions which are commonly asked as well about the algorithms. This will serve as a useful overview of exactly why it's such a great product and why I created it, and it'll help you understand exactly how trading works from a professional perspective as well. So let me kick off with these questions and their answers. First of all, on which time frames does the indicator work and which currencies? Now, anybody who ever tells you that any indicator to buy and sell currencies works on all currencies at all times, whether they're looking at a 1 minute chart, that means a chart which changes every minute, or one which is 1 day, cannot simply be telling the truth. And the reason for that is having traded currencies, but not just that, having worked with, for my first book, The Mind of a Trader, the global head of foreign exchange at Salomon Brothers, which was probably at that time the largest foreign exchange trading bank in the world, so knew every single currency. I can tell you there is not one individual or one methodology which works right across every single time frame. So one would expect, as is the case with our indicator, that it focuses on certain currencies, and I've gone for the most popular ones, the most liquid ones, the ones in which people tend to focus their energies, and the reason they focus their energies is because there's more to be made from them, and those are, as you can see there, pound, dollar, and the euro against the dollar. And there's certain time frames which I've focused on. This gives you a variety, depending on whether you're in a day job or whether you're going to be looking at this full time, gives you a variety of options. If you're looking at the 1 hour chart, you'd be waiting for signals relatively frequently. That means you might be looking at one signal a day or one every couple of days, but you're in front of the computer. If you're looking at the 4 hour chart, then of course you've got a little bit more freedom to move, because each bar only appears every 4 hours. So if one has appeared, you know you've got a bit of time, you've got a few hours before the next one may or may not appear. And what I've done with this is I don't do 100 indicators to buy and sell every second or every minute or every hour. And the reason for that is those people who do those, they're kidding you. And the reason is nobody can afford to sit in front of a computer every second of the day and just place trades like crazy. All that does is create lots and lots of money for the broker, who makes a bit of money every time you buy and sell a currency. Not because they charge commissions, but like when you go to the travel agents and you convert from dollars into pounds and then back again, you lose a bit each time. So I definitely didn't want one of those which gives hundreds of signals every day, because it's not a good return on your time invested, because you'd have to sit in front of the screen all day long. It's not sustainable, because nobody wants to sit in front of a screen all day long, every day, placing 100 trades, and it's very costly. The clever thing to do is make the same returns, and I'll show you some of the returns again, but be only looking to place maybe one trade a week and hold it, or one trade every 2 or 3 days, and that's the aim. So if you're looking at the daily chart, which is what we'd focus on if we were looking at pound dollar, what happens is each bar only appears every day, and that means at the end of a day, and because foreign exchange is 24 hours, a day actually essentially means midnight New York time. Well, depending on the broker, sometimes it's midnight London time, but usually midnight New York time. A bar appears of just what has happened that day in terms of the markets, and after a while you get the experience to realize that there are some days where you're clearly not going to get a buy or a sell signal, because the market's just not going to move that way, and you'd be able to tell that when you get used to the indicator, and I give webinars to show that as well. So you wouldn't necessarily need to sit right in front of it every second of every day. You can just keep an eye on it, go back and forth and just see. And as I say, you'd only expect to get maybe sometimes a buy or sell signal once in a week, and especially if you've already got a trade that's open, you know you're not going to get a sell signal immediately. The sell signal, as we will see, could be a few days away, could be a week or two away, but you want to keep an eye on it each day just to see if you're anywhere near that kind of a condition, and I'll show that in a second. But the point with this is you're not glued to the screen, because think about it, why would you be? Imagine you'd bought some shares like Apple. Do you think you'd be right in front of them every single second, or do you think the people who've made lots and lots of money have ended up buying it, waited for the market to have the bigger moves, because that's where the money's made, when you buy low, sell high, and that takes time, and it takes weeks sometimes before that happens, and then you get a sell signal and you've made a good profit, as opposed to, and what we don't want to do is try and make a tiny bit of profit 100 times a day. You know, a little bit here, a little bit there, a little bit here. You'd go hyperactive and you'd go crazy sitting in front of the screen all day. So I've, as you would expect with my experience, picked pound sterling, pound dollar, as you can see, and euro dollar, and I've picked time frames for this algorithm to work on, are the time frames that I use, that I would trade off as well. So let me move on to the next question. You do need to be present, I've said, to execute the trades. It doesn't automatically happen, doesn't do that, but it does not have to be hundreds of trades a day, which I explained would be costly. And you don't mind not having 100 trades a day, because like I said, the key thing is, and I wrote about this in the Financial Times when I used to write my column there, is it's return on your time invested, not just your capital invested, that's important. If during that time you can be at your day job, you can just, and as I used to do when I was an attorney, when I was a lawyer, is you can do the day job and then just check now and again, that's ideal, that's the better situation to be in. So, what then of some of the other issues? First of all, you don't need any other software other than the trading application, which is free. Isn't that fantastic, not having to buy lots and lots of other stuff? People ask about system requirements. Well, it can be used on Windows or Mac. And you should ensure that you've got a steady internet connection. Of course, that's going to be important, a steady internet connection. I mean, look, it's the bare minimum I can ask people in the new millennium, is to have a steady internet connection, because, of course, we're trading online. I've already mentioned the types of currency pairs, which, let's just recap, pound, dollar, and euro, dollar. What are the types of trades? Well, there's two types. You buy first, and then you sell later, or you sell first at a high price and then you buy at a cheaper price later. That's still buy low, sell high. It's just sell high, buy low in the other order. And that's what's called shorting, which is explained in the documentation that I provide. I provide extensive documentation, step-by-step guide on all of this, and explains how through, I think I've given about 15 example trades and walk people through it to show exactly when a buy signal appears, when a seller signal appears, and the types of trades. So they really can learn through the documentation itself, which I think is invaluable. I've really taken time to make sure it could be understood by absolutely everybody, because this is something which is of keen interest to absolutely everybody. Okay, next question. How much can you make with this? Let's look at a typical example again in that case. How much money can actually be made? Let's look at an example which I showed earlier. Looks complicated, that's only because I've drawn all these arrows to explain what we've done. So we had the entry price. We had the entry price, which is, when we look at this green arrow, you see that that gives us a warning that there's a buy signal coming. The red horizontal line, it's the lower one. Ignore the higher one, because that relates to selling from an earlier trade, so we can ignore that because that's not to do with this position. You've got this then red horizontal line, which shows that as soon as the price moves above it, we should be looking to buy, because then that would be the 2-period high, and as soon as we get a 2-period high, know the highs it's been for 2 periods, then we know that we should be looking to buy. By the way, this is pound dollar on a 4-hour chart, 4-hour there. So each one of these bars represents 4 hours, and just to recap to people, that's the low point at the bottom of the bar in that 4-hour period. That's the high point at the top in that 4-hour period. That's where at the end of the 4-hour period the price closed. That little horizontal stick going out towards our right is where it closed at the end of the 4-hour period, and that horizontal stick is where it opened at the start of the 4-hour period. So if it was a daily chart, each one of these would be over a day, how much it moved, and if it was a 1 hour chart, it would be over an hour. And you can imagine, and you get used to it very quickly, that actually over a 4 hour period, this will just move up and down a little bit and it'll give an idea. But we already know to keep an eye open. We know to keep an eye open and when to monitor this, because we got this green arrow which said warning, warning, keep an eye open. In the next 4 hours we may well get a buy signal, and we got this signal here. Over there. Now imagine you'd actually bought into this. You wouldn't actually therefore need to keep an eye open every single bar. I mean, I'd recommend you'd keep the computer open, you'd check it now and again, but you'll realize that since each one of these represents 4 hours, and look at how much it's moved, all that's profit, by the way. You don't want to be selling out of that, you want to be watching it. You get a warning sign, you get this pink cross which gives us an advance warning that we might have a sell signal. So you can see that you don't have to be glued to the computer. Some people want to work hard to make a return. Well, I'm telling you, funnily enough, when you buy and hold, whether it's currencies or, like I said, stocks, you might not need to. Like I said, with something like an Apple share, you might just buy it and just hold on and hold on. So don't be fooled into thinking, oh, I've got loads and loads to do. I've got to do 1,000 trades a day, 100 trades a day. Therefore, this must be a really good algorithm. Well, actually, it's all about the money you make. So let's look at that again. That's the buy signal. Now, I've marked it here with the yellow sign. It gives us a buy signal. We look at the price, and the price is 1.59425. Don't worry about that so much, because when you hit buy on the computer software, it remembers what the price is, and so on. Of course, you just click buy, and it'll do that. And what about selling? Well, remember I said we sell in 2 lots. 50% at when we get the first bit of weakness, which here was a 2-period low after the pink cross there, and then there was a later one which was over here, and we sold that. And I've worked out what those amounts were that we sold at, and you can see the figures there, 1.61 and so on, and 1.61265, etc. That's an average of that. So we basically would have sold at that, bought at that. Well, what's the difference? That's simple math. Sell price take away buy price. But remember, so what's our profit? What's our profit? Remember, in foreign exchange trading, you use something called leverage. So if you placed a $3,000 trade, you'd effectively have, via the broker, $300,000. Now, that might scare a lot of people, but don't worry. Foreign exchange moves very small amounts. So that's why, to some extent, even though it's 300,000, you do need the 300,000 or the leverage that a broker provides. And in this case, you've got a $300,000 leverage. So that move of 0.0175 times 300,000 gives you a profit of 5,250. So let's say, and I've said, well, let's say we missed the signal. We didn't get in right at the right moment. Let's say we were a little bit delayed, or we didn't get the exact price that I put there. You might say, well, Alpesh, that's all very well. It all looks very artistic. But what if I didn't get exactly that price? So I'm saying, yeah, fine. Let's say we're almost halving that. From 5,250 profit, which is the one you can see on the screen, let's say you only made $3,000. Well, that's still 100% return. On your $3,000 that you put down, that's still 100% return, even though I've wiped off nearly half of it, because I've said, oh, maybe you missed it, and so on. And that's a typical example. I went through, found a typical example. Some are better. Hey, some are worse. I don't want you to think, oh, wow, all of them are this good. He's just picked one which works out really well. Well, actually, some are better, some are worse. So we should know that. But here's a typical one. The most important thing to take away from this is the type of profitability that's out there. Now, you might say, well, Alpesh, $3,000 in, what was it, 18th of April until the 24th. Now, there's a couple of things I want to get across to you here. Notice how it was 100% return over 6 days. It didn't happen in 1 minute. Equally, it didn't happen in a year. So when people ask me how frequently do you get signals, well, we got one there on the 18th, we got another one 6 days later. That's how frequently. We might only get one every 6 days, but we make 100% return. We don't have to sit in front of a computer every single second of every single day for that to happen. We keep an eye out, we notice, we monitor and see what's happened. Those are the kinds of time frames we're looking at. That's a pretty comfortable period of time frame because it gives us ample time to do other things. It's a good return, 100%. The other thing you might ask me is, why would I just not put
everything I've got into it. Well, I hope that it answers from the question that you've asked. We wouldn't do anything as silly as that. We've got to always keep small sums of money, because nothing is 100% foolproof, nothing is 100% guaranteed, and we don't want to suffer a big loss. Let's say we put, I don't know, all the money we had in the world, let's say it was $100,000 into the first trade. What if that was a losing trade? They can happen. So we don't want to do that. We want to always do small trades and be patient. The trick with success in finance is patience. Small sums of money, but patient accumulation. Do not ever take big, fat, greedy bets. I guarantee you, your fingers will get burnt, because the way of the world is, it's one of those laws. Soon as you do a bigger bet, even if you've had wins in your last 10 bets on such trades, that's when you lose. It's just the way things are. It's just how it works. So do not ever be greedy, be sensible. So then I get asked, how do I install this algorithm? How long will it take? Well, actually, the installation process, when you download the algorithms, you just pay for it, download it. There's a document which I've done a step-by-step guide on how to install it. Probably takes, if you're used to dealing with computers, probably takes 30 seconds. If you're not, you might have to read it. It might take you 10 minutes to read it. And how long does the installation take? Seconds, because computers are fast. It's not a big fat program or anything, and it's a common way in which professionals trade foreign exchange. They have algorithms. So all of this is just that my algorithm, I think, is one of the best ones out there, if not the best one out there. And so it's not that we're doing something really weird and unusual. It's just that my buy and sell signals are better. So it doesn't take long to trade, because this is common software. It's a bit like when you have an iPhone or a smartphone and you download an app. How long does that take? It's exactly the same principle as downloading an app. What support do you have? Well, we've got video instructions, we've got email support. You can send in your queries, we'll pour over it, and also I do webinars and I say lots and lots of video instructions, so people really can pour over this. Worst case scenario, you're going to learn a heck of a lot about how to trade, how professionals trade, how it all works as well. We've got free training webinars for the product buyers. I put a question mark there because that's a question. Yes is the answer. Are there any other hidden costs or ongoing fees? No. We don't charge anything. It's a one-off license fee. We're not charging, though we might in the future, who knows, but it wouldn't apply to anybody who's bought these. But maybe we might change the model, the way the software industry is moving, where you charge a monthly license fee, because that's a common thing. But at the moment, we don't have any plans for that. And once you've bought this, it's yours. We can't and won't ever in the future charge you anything extra for it. And the brokers don't charge commissions on trading. They're big, large brokers. In foreign exchange, it's very rare for a broker to charge commission, so you're fine there. How do they make their money? Well, they make it in the same way a Thomas Cook or a foreign exchange currency exchanger at the airport does. You buy dollars, you sell pounds, and vice versa, except they don't have those big, massive rip-off differences between the buy and the sell of the currencies. These are very, very tight, because these are professional institutional foreign exchange brokers. Will this indicator stop working? Now, there is no time limit to its use. It's yours. It's yours for life. The other thing that will it stop working could mean is, will it stop being profitable? Now, I can't see into the future, but I have no reason to believe that suddenly the markets are going to, in some way, and the currencies, the very particular currencies we focus on, are going to change. Now, you could ask, wait a minute, Alpesh, what if, one of them's the euro that you've put in there? What if the euro suddenly vanishes? Well, okay, then we'd have an issue. I mean, then we might as well say, what if Iran gains a nuclear bomb? As far as I can determine, and any professional would be able to determine, there's no reason to assume this indicator would stop working. How long can I use this indicator for? As I said, you buy it, it's yours for life. It's a bit like when you buy a laptop. You buy a laptop, or you buy something from Microsoft. It's yours. You've paid for it. You can use it as long as you want, forever. And that's it. It's maybe a little bit too hard to believe for some people. Do all brokers allow you to use this type of indicator? Well, no, we're recommending the broker, because not all brokers have the same software. And so what we've done, a little bit like when you create an app for the iPhone or Samsung or Nokia or whatever, I couldn't tell you that there's a smartphone out there this app could be created for. In the same way with this, algo, I couldn't tell you that if you came up to me and said, "Oh, I've got a broker in Colombia, Argentina. Can I use it there?" Well, no. We're going to tell you which broker. We tend to stick with the very biggest, most highly regulated, the most reputable, the most proficient brokers out there. That's what we stick with. So you won't have a problem with the brokerage side. How much space does it take on my computer? Pretty little, actually. When you download the algorithm and use the broker software, the way these things are engineered is to make sure that most people, if not all of them, would have the hardware already. Because of course the broker doesn't want to create something in their brokerage software, and we don't want to create something in the algorithms and the software we use where so few people could use it, or they'd need some supercomputer. So how much space does it take? Next to nothing. And again, going back to the specs, the only questions we sometimes have tend to be minor technical ones, usually not to do with the algo, but we have these questions that we can answer if somebody does have IT questions. Imagine you've downloaded, something from Microsoft, like Microsoft Word. It's a prevalent piece of software, and you're using a computer like a Dell computer, which everybody has, and yet sometimes you do have little hitches for whatever reason. There might be antivirus software on your computer or something, and we can help solve those little things, which has nothing to do actually with your laptop, has nothing to do with our software. It's just one of those things that sometimes happens, but that's pretty rare. I've maybe 1 in 100 times you come across something like that. Can a newbie use this? Well, yeah. I mean, it's actually created, as you can see, the clarity of the signals, the documentation that I've written and provided on how to load the algo and then how to use it in terms of buy and sell signals is really created for somebody who is completely new to this. So what I'd say, the only thing I'd say with a newbie is, look, if you're completely new to it, don't expect to start within 30 seconds. You want to read the software, the manual, and the instructions. In the same way with anything in life, I'm at the moment, I go to the gym a lot, but if somebody said to me, "Hey, can you start lifting 100 kilos tomorrow morning?" I'd say, no, let's work up to that. If I'm a complete novice, I've got to learn the techniques, I've got to learn the manuals, read up about it, and then do it. So I'd say, be sensible, use common sense, read the documents that I've provided. They're really simple and easy. I mean, I'm really proud of them, how clear they are that I've created. Can I use this on a laptop, i.e. when I'm traveling? Yeah, absolutely. The key thing is, and I only ever use it on a laptop, by the way, because I travel so much. The key thing is to make sure you've got a good internet connection. So to be honest, for instance, if I'm in India and the internet connection can be a bit weak, then I want to try and avoid doing the trades at that point, albeit because I'm only looking at 1 hour or 4 hour one day, it's not actually a big problem. And it hasn't ever been a problem, but it's just that with jet lag and everything else, I want to be concentrating. So that's what I'd say with traveling. Can I use it when the markets are closed? Well, actually, currencies are 24/7, so the markets aren't ever closed, except there's a small period. You can tell when on a Sunday morning when pretty much the world is asleep. But yeah, but it gives you the buy and sell signals, if you see what I mean. So it's not a question of, are the markets open, am I spending 100 trades a day? Remember, it gives you the buy and sell signal, so it accounts for the fact that the market might be closed. You don't need to worry about that. How do I ensure I don't lose money using this indicator? Brilliant question. Remember what I said, start with small amounts. I gave the example of $3,000. You might start using it with $2,000. Always start with small amounts. I can't guarantee you it will always, every single trade will be a winning trade. If that were the case, I'd be the first trader in history, even better than Warren Buffett. But let's assume 6 out of 10 are correct, because 5 out of 10 is a coin. So let's assume 6 out of 10, because I'm being conservative. I want to be a conservative, genuine bloke. I don't want to be one of those people who says, "Hey, look at my trip last week to Monte Carlo," or whatever. I want to just tell you, look, 6 times out of 10, and that is enough to make us profitable. That's the whole nature of professional trading. Is there any reason I shouldn't buy this? Well, I'd probably say the best reason is if you know that you're lazy and you're never going to use it, and that actually you're not serious in terms of finding a new source of income, looking into it. If you're one of those people who's sort of, and trust me, I say this because I know people like this, who wants to talk about it but doesn't actually ever want to do anything, well, hey, don't buy it. Save yourself some money. How soon can I be up and running with this? Well, like I said, you buy and it's immediately ready for download. The 2 manuals come through. You can read up on it. You could be up and running if you're proficient with these things. Just depends how au fait you are with computers and foreign exchange trading. You could be up and running in less than an hour. If you're not so much, you'll want to read. It all depends when the first buy signal comes after you've loaded the algo. It could come within an hour. It could come within 3 to 4 days, 5 days. So it all depends upon that side of things. So what's the next step? Well, there we go. It's time to take immediate action. Call to action, always very important with these things. And that's the link, alpeshpatel.com/go. And it's a lifetime license, as I've mentioned, for a one-off investment fee. I don't plan to do many of these webinars and so on in terms of promoting it. I only want to do it for the people who've bought into it, because the ones who've bought into it, I want to do webinars for them because they're part of the club. We all want to make money together, but I'm not in the business of selling software, so I don't want to be doing lots of sales webinars. So this will be one of the rare occasions in which I do that side of things. But for me, it's a lifetime dream come true, because I wanted the algorithm software which works, and I wanted that line of trading, that channel of trading as well, and share that with the retail clients, because that's been the story from all my books, my newspaper columns, my TV appearances, is take what's complicated from the institutional side, offer it to the retail market, the mass market, and simplify it for them. And this is that, and that's why I'm really proud of it, and to put my name with it. And I hope you're going to have a very lucrative time with it. But as I say, we're going to go on the journey together, because I'm going to do the webinars with you together. You're going to have the manuals with it as well, so you're not just being dumped with some software and there's nobody available. There's the email support as well. So I hope to see you on the other side, as it were. I'm only going to do a limited number of these algos, because first of all, there's only so many people I can handle on webinars and so on, and that's the most important reason for limiting the numbers. So I hope you will be one of them who takes that step, gets all the education, gets all the webinars, and recoups their investment, let's hope, on the very first trade.